let us go there now, and we're going to be looking at this, which is woke up to this today. How about this? Crew abandons cargo ship after Houthi attack and U.S. MQ-9 Reaper drone downed by rebels, they say. I don't have confirmation of that yet, but so the Red Sea has been getting patrolled by, remember, the United States very embarrassingly tried to put together a coalition of the willing, right, to Operation Enduring Freedom, they said, and they were going to split up the duties of protecting all these different ships. And France and Spain very notably backed out and said, no, thanks. Now they're going to be patrolling and escorting their own ships. So it's kind of serve yourself. And we know the United States has set up a series of boxes inside the Red Sea so that maybe the Kearsarge, USS Kearsarge, or other ships are taking little boxes. Well, whoever had this box for this ship, man, they dropped the ball on this, and we're probably not going to find out why. Were they in the wrong end of the box so they couldn't help? Was it a miscommunication? Did they actually try and shoot down the missile that came in and wrecked this ship or not? So the crew had to evacuate. The ship apparently is not sunk. It's anchored, but it's no longer propulsion worthy, right? So they hit the engine room, I'm going to guess. They say none of the crew were injured, so I'm guessing the missile did not hit the bridge. So that means the targeting on these missiles pretty fancy, right? It's definitely going for the back end of the ship, trying to hit propulsion, not trying to kill people. So that means it wasn't just guessing here, but it probably wasn't just a Hail Mary, throw a dumb bomb out that direction and hope for the best. This thing sounds pretty sophisticated. As well, whatever sophistication the U.S. had to try and prevent this from happening didn't work out. So that's a pretty big deal. Now, this whole region is getting hot right now, obviously. And so what do we do with that information? Well, clearly, what do you want to do if you're a really stupid country or one that wants to harm itself? You would drain your strategic petroleum reserve. You would gaslight everybody about what really is oil coming out of the U.S. and confuse natural gas liquids with the real stuff that we actually need. You would piss off all of your other partners, like, say, I don't know, Venezuela or other places that you might want to get oil from. And then you would start a war and stir up trouble in the Middle East. And that's exactly what we see happening now. So this is a big deal. If this goes hotter and we see that this gets more regional, and by the way, this conflict, there's all kinds of stuff happening out here. It's almost impossible to keep up with the daily skirmishes and drone attacks and this and that's. Bottom line is that if this goes wider and Iran really decides, this is it, now's the time, now or never, and they block off the Strait of Hormuz, you can set an egg timer, an international egg timer on how fast it is before oil gets to levels that utterly cause a credit event and destroy these systems we happen to have right now. As if that wasn't enough. Related to that, how about this? The fact that we now see bank credit is now contracting. This comes to us via a game of trades. Bank credit contracting now for the first time since the great financial crisis. Now, remember, I always show that chart and it says that, that little wiggle in that debt chart, right? So there was the 6 quarters where debt actually went backwards in the great financial crisis. That's what almost broke the system. And when you understand the system of money, that actually it's fiat money, that's actually debt-based money. There's a lot contained in that once you study what it means to have debt-based money. All money is loaned into existence. Therefore, if you're making loans, more money is being created. And we have an exponential money system with ever more levels of credit, which means we need more and more money created, particularly when you have thousands and thousands of billionaires who can't possibly spend all their money. So when they're harvesting their money out of, say, interest payments that come their way or other, let's just say, dividends or private equity cash flows, all that money coming their way has to come from somewhere, right? Where does it come from? And many of them are just stashing it and stuffing it away so that it becomes a stagnant pool of that cash over here. And then, well, we need more cash to keep the whole thing going. So that is the system. And by the way, here we are again, bank credit is contracting sharply. So what do we do with that information? Well, obviously, you can't have overall credit in the system going down. So if bank credit is contracting now, not just less, it's not just a low pace, it's in negative territory now. Well, who's filling the gap? Ta-da! Enter the U.S. Treasury Department and other governments. They are busy borrowing as fast as they can because of this. I guarantee you, when the bankers come in and, pick up the bat phone and call their friends at the Treasury Department, like Janet Yellen, they say, look, Janet, we're going to have you picking up the slack here because we're not getting a whole lot of lending going out the bank right now. By the way, consumers tapped out. I mean, they did what they could, crammed up interest rates, made houses stupid unaffordable. People who could buy houses are, but mortgage debt is not really filling the slack. And guess what else isn't? Let me see. Where is it? Yeah, look at this. Credit card. This is from WinSmart, certified financial analyst here, Winfield Smart. Credit card defaults from small lenders have hit record levels, higher than the peak of the dot-com bubble and the financial crisis. We are talking record defaults over 7%. This is a big number. So what do we do with that? Well, given that credit card debt is actually, really, really large right now. And by the way, this is in small lenders. So this is delinquency rate on cards, loans, banks, not among the 100 largest in size by assets. You ever get those credit card offers from stores or from, small banks. But these are the people who've often been, and these entities are often the ones I would guess are the ones out there working hard to drum up business. So they might be a little bit more sensitive. But anyway, look at that default level that says, wow, I guess when people are busy defaulting on their credit cards, they're probably not busy taking out new loans. So it all begins to fit. So this is speaking to the idea that we're going to have a massive credit event at some point in time. And you know what would really put the smoke and burn on that? Oil that suddenly spikes in price. So let's wander over to oil real quick and see how we are doing there today. Let's see. Let me just pull up futures real quick. So you can see here that oil has been slammed down pretty hard for a pretty long time by somebody. I think this is fictitious price behavior again. I think we're seeing this fictitious price behavior in the metals as well. See, copper smashed down, platinum smashed down, silver, palladium. Everybody's been getting hammered. Gold's sort of like trundling along just above 2,000, but it's barely hanging on there. It's going nowhere. Grains, don't even get me started on the grains. These farmers just getting crushed here all up and down the path. And let's see what else we got going on here. Energy. Energy, natural gas, I'll get to that in just a second in the U.S. That is a big story. But what you can see here is this huge crushing to try and get oil prices down. This is very fictitious behavior right here. All of this oil price has been held in check through this whole period of time here, from about here to here, because of the United States dumping its strategic petroleum reserve. And also somebody has come in, these so-called CTAs, commodity trading advisors, are coming in with hundreds of billions of dollars, and they have been cumulatively and collectively short. I have my suspicions. I strongly suspect that at least some of those CTAs are operating under the Cayman Islands, and if we had a full Fed audit, we would discover shenanigans and or a full Treasury exchange stabilization fund audit. We will find shenanigans. This is shenanigans. And people are, oh, Chris, that's crazy talk. How dare you think that our markets aren't free and fair? That's just sour grapes. You just called it wrong. Well, more and more people are waking up to the idea that the same machine that controls